So I ran into a very interesting case study this week with a client. So basically, quick background, client does a lot of traveling with grandkids and travels the country and they want to buy an RV. Well, RVs are one of those things, it's love hate, they lose value, and a lot of people end up pulling money from a retirement account or just getting a payment, whether it be 10, 15, 20, or even up to 30-year terms in order to pay for said RV. Well, this client was already familiar with the reverse mortgage product and said, okay, well, let's take a look at another possibility of doing this. House is currently paid off, free and clear, $550,000 house. And based on where rates are today, they would have access to about a total of $205,000 in the line of credit. Now, they're going to pull the money up front because they're going to buy an RV. Now, this may not fund all the RV initially, but it'll get pretty close because you do have a limit what you can access in the first year. So, but 1 year and 1 day, they can access remaining amount. So there's a chance they may have to get a small RV loan, for, 20, 30, 40,000, depending on how much they purchase for, but they're going to be able to buy the vast majority straight up front with the money from the reverse mortgage. So as you can see on the screen here, they're going to have access to about $115,000 at closing that they can utilize for said RV. And then they'll have about 90,000 or frankly a little more next year because the 90,000 that's left in the line of credit does have a growth feature that is part of it. So it will be a little bit more next year that they can access or not access, just having it sit there. What I found is pretty interesting, even with the interest rate right now, with the reverse being a little over 7%, and that is an adjustable rate and it will change based upon the 1 year treasury. I was kind of curious, what are terms and rates on RV loans? So I went to NerdWallet, just Googled it, and it looks like, as you can see here, there's several different ones between Bank of the West is anywhere from about 4.2 to 10 and a half, from 4 to 20-year terms. US Bank goes to 1 to 15, starting at 5.25, and USAA. And, so what it looks like to me, and the biggest thing that can be a hamper, especially on someone's retirement income, if you go get a RV loan, you're going to get yourself typically anywhere 7, 8, maybe a $1,500 a month payment, depending on how much you spend. What's unique about the reverse product is that you could use the RV, you could use your house essentially to buy the RV. And then if you wanted to make payments to yourself, you could. Payments are not required. You're just required to make the taxes, the insurance, the HOA dues if you have them, and live in the home as your primary residence. So kind of you're almost treating yourself like a bank. One other thing here is I looked locally, just once again, Googled RVs, this credit union popped up. I mean, and it even said boat, motorhome, travel trailer loans, whatever. I mean, you're 7, 8, 9%, give or take a little bit. So even if you look at far as an interest rate thing, it's typically better to try to use the house to finance this thing because it allows, more flexibility. It doesn't require a payment. And if for some reason you have to get rid of the unit or whatnot, you're never worried about being upside down in it. You can sell the RV and then pay back as much as you want on the reverse mortgage, or frankly, don't have to do that at all. The reverse mortgage offers flexibility. And that's the most important thing in retirement is having accessible funds. Because what good is it to have a free and clear house at $550,000 and have zero access to that equity? Hope you enjoyed the case study here. Please like, subscribe, share with anybody you know that may be considering this as an option. But I do think this is probably one of the best ways over the age of 62 to buy an RV.